In the name of Allah, the most beneficent, the most merciful. I am Muhammad Asif Chaudhary. Today, I will present again on the tax avoidance in family farms, a very beautiful and comprehensive article written by Cirillo et al. In 2025. That article is published in Journal of Business Ethics. That is the very comprehensive, very good journal, in which impact factor journal, in which this article is published, in which they use a very philosophical term, the term that is transgenerational responsibility. Mean when a person or ancestors transfer their to their generations, that point is discussed in this point. There is a basic keyword of this article is CEO's transgenerational responsibility, and tax avoidance is discussed. And this business orientated academic summary I will represent you regarding the CEO's transgenerational responsibility and tax avoidance in this article. I think you will learn more, because this author has written a very philosophically in this article, and the journal is also a very reputed journal, and you will learn more if you remain with me in this presentation. The first of all, I will tell you about the what is the background and motivation regarding this research. This research is ethically family farms debate, how the ethically family farms transfer their shares or their legacy towards their generations. It is discussed in this in this articles. And family farms sometimes more ethical and sometimes not, sometimes ethical in some things and sometimes not in some things. So we will discuss how more they are ethical in which things, and where the family farms are not ethical in who are the farms. And tax avoidance, you know, the tax avoidance carries the reputational and social risk for all over the organizations. So these are the background and motivation of the study. And what is the research gap? Basically, the researchers know that for every good research there should be a specific research gap. In this research, the gap was that the CEO's moral value are overlooked in tax avoidance research. Whenever we read an article regarding to tax avoidance, they overlooked the CEO's value. What are the CEO's value? What are the his credibility, etc. And transgenerational responsibility has not been previously been tested, because it is the first article who discussed this transgenerational responsibility for a CEO of a family controlled firm and family firm. I at least read first time, and it is the novelty of this article that they use this keyword. And need to assess how future oriented moral obligation shapes the tax strategy, how the this novelty create the future decision making in taxation by the CEO's value. We will discuss all in this research paper. Now, what are the key concept of the CEO's transgenerational responsibility are the moral obligation felt towards the future generation. How for the future generations CEO can transfer his values, his wealth, his money, his style of business to its generations, and rooted the founder identity, how marriage or threshold or the age are considered for founder's identity, marriage and parenthood and age, etc. All are discussed in this concept. And also discuss the affected long-term ethical decision making, how long-term decision making are made by the CEO and when he has a transgenerational responsibility. Then the theoretical framework of utilitarianisms, there is the philosophical term is used when you convert to society, convert to other stakeholders, when you think about the benefits of the stakeholders, that is the theoretical framework. And ethically judged by outcomes, cost versus benefits. What are the ethics used for cost of the, and what are the benefits of these ethics? And tax avoidance is also ethical if the benefit exceeds the social cost. Then we compare what are the ethical benefit, what are the benefit for tax avoidance, and what is the social cost. The organizations compare these two things for avoiding the taxes. If they have to bear a social cost more than the benefits, then they did not avoid the taxes. If they have to bear a more social cost then or less social cost, then they did not avoid the taxes. And family is seen as a primary stakeholders because there are a lot of stakeholders in an organization, but in this article author used as a family main stakeholder of the organizations. And what are the hypotheses? Hypotheses of this research are used by, first of all, the very novel idea, that is the transgenerational responsibility. When the CEO use transgenerational responsibility, then more tax avoided. Mean who use the transgenerational responsibility to for their generations, they avoid the taxes and collect more money for their generation and deliver more to their generation. It is the first hypothesis. And second one is that next generation involved in strengthen this effect. What the next generations are involved which strengthen the this relationship which we discussed as early. And third one is the financial distress strength this effect, and what effect the strength financial distress gave on this strength. All these will be are discussed in this article, and they prove that they are positive, but we will see what the result are coming. And what the methodology for methodology of the research, because it is Italian based economies research. The sample of 272 Italian listed firms from the period of 2014 to 2018 has been selected, and the data source are AIDA, that is the Italian Financial Corporation database, and CONSOB, that is the database. In italic it is written that the Security and Exchange Commission of Italy is used for this, and factor analysis for the construct later variable from transgenerational responsibility are used for collection of this database and check this relationship. And why the use the case of Italy? Because in Italy there are a very high rate of corporate taxes. Corporate tax is high in Italy, and more incentives for tax plannings. Who plans the taxes given the more incentives. And book tax conformity allowed the managerial decisions because discretions, because the managers all over the world in organization it is the discretion of managerial they can avoid taxes or pay more taxes. And in Italy it is also happened. And the family firm domain, the Italian market, also in Italian market the family firms are discussed more and used in this case. Now the results of the research are that family finding transgenerational responsibility and higher tax avoidance. On the y-axis there is a tax avoidance, and on x-axis there is the transgenerational responsibility. When transgenerational responsibility is low, tax avoidance is also low. When medium, tax avoidance is medium level. When transgenerational responsibility become higher, the tax avoidance level higher. Mean the CEOs in Italy or Italic firms think about their generation instead of the stakeholders of their society or their country. They avoid more taxes when they think about their generation to convert them their wealth. So this research proves that. And there is also a graphic representation of when there is a low next generation involvement, then the tax avoidance is less. But there is high generation involvement. When involvement higher, then tax avoidance increases. And the low transgenerational responsibility have a tax rate lower, but when there is a high, then the tax avoidance increases in organizations. So the author proved very beautifully and represent this topic. Now we discuss the, if there is a financial distress, then what effect is come into the organization. This is the tax avoidance and low transgenerational responsibility. When there is a low financial distress, mean they have not required the money cash flow for their organizations, then the tax avoidance decreases. But when there is a high financial distress, then tax avoidance increases. With the financial distress increase, the tax avoidance also increases. So the result shows that the transgenerational responsibility and financial distress affect the tax avoidance high, positively associate it as a positive relationship. So the firms where CEOs are transgenerational responsibilities, they avoid more taxes. When there is a financial distress, then they also avoid the taxes more. But moderating effect of next generation involvement, as already I explained it, that when next generation is involved, the effect of CEO's responsibility intensifies. That closer emotional ties more weight on the future benefit. Mean when there will be a ties are close to their next generation, then they avoid more taxes, and avoiding taxes seen morally acceptable for family stability. They avoided the tax for their family stability. But the previous research show that whenever there is a legacy of the firms, most of the CEOs did not avoid the taxes, because they want that their legacy be maintained for their generation. They should not call any people them that they theft or avoid the taxes. So no, but this research clears that the new when you have a strong ties with your generations and generational responsibility, then you avoid more taxes. And moderating effect of financial distress, as already I explained, that when there is a greater financial distress, then tax avoidance will be more. But when the financial distress is low, then tax avoidance is low. And healthy firms show the opposite dynamics, avoiding or decreases in healthy firms. And the key results of regression summary, as I explained, that what are the results that transgenerational responsibility significantly predicts the higher tax avoidance, TR, avoid the more taxes, and moderation of next generation involvement, that is also a positive result, and the moderation of financial distress is also positive result, and robustness alternative measures the tax avoidance and ADG is also clear. Now we check the what are the theoretical contribution. The advance in heterogeneity research in the family firms and introduce of CEOs moral value into the tax strategy literature, and the extent of ethical discussion via utilization utilitarian lens. Indeed are the contribution in the literature, and practical implementation. For practical implementation, the authorities and other should enforcement agencies think that family firms should reflect on the moral basis of tax decision. If they have think that their generation are required more, and they think about ties are strong, then they avoid more taxes, and investors can assess long-term orientation via CEO value, so that if they avoid the taxes for their generation, then the investors who invest their money in the form of shares and who are the shareholders, they can also check that the firms will give more benefit to their generation, not to the shareholders. And policymakers may refine tax regulations and understanding drivers for how there is a strong family relations and responsibility felt by the CEOs. That firm should be checked, and the tax avoidance should be reduces. And if we talk about the limitations of the future research, then the transgenerational responsibility is measured indirectly, and effective tax rate for tax avoidance capture limited tax behaviors, and single country study limited to generalizability, because it is the study of only Turkish companies, and they have their own mind, and they so they are italic firms. They have their own mind, and they, if it may be different from the other countries, like in Pakistan, the future research can be done in Pakistan. I am doing on these topics. Inshallah, it will be fruitful for the literature. And when we go for the conclusion, then CEO's moral responsibility toward the future generation matters. How he has ties with the future generation. If he has not in his generations, then he will did not avoid the taxes and will pay all the taxes. But he have strong ties, then he can avoid. And next, the ethicality of the tax avoidance is context of dependent. Ethicality depends on these issues, and the next generation's financial distress amplify the effect. How the next generation's financial distress involves, that can affect for this purpose. So thank you very much. I have concluded this chapter, this articles, which is written very beautifully. The author used very philosophical terminology, and he gave the novelty in research, and gave the novelty in the total knowledge, and it was a very beautiful and explained by author and published in a good journal. I think you all understand my presentation regarding this paper, and if you understand it completely, then I think you will share it with other people. If you have any problem, you can comment on comment box, and please like, share and subscribe. Thank you. Have a nice day.